Welcome back to the Brent Bruce Daily. Today is June 20th, 2023. It is now 5:02 p.m. Central Time. Let's take a look and see where home loan interest rates really are, what is making the move, and what to expect for the future. First of all, wanted to jump over here and show you a little bit of news that came out. Student loans are now going to be in repayment again starting in October. Now, again, student loans, as you probably know, have been deferred for about 3 years after COVID started. And if you look in here a little bit further, it talks about the fact that they're saying they're very serious this time about student loans being back in repayment. Now, how does that affect mortgages? Now, what you should know, especially if you're a real estate agent or someone that is involved in the industry, is that student loan debt has always been calculated into the debt ratios when it comes to the mortgages. So, debt ratios and qualification for mortgages. So, even when they don't have a payment, they're in deferment because they're still enrolled, they're still going to school, even years before COVID and before this pause that we've been on for the past 3 years, we have had to actually calculate a monthly payment and use that in the debt ratio calculation for qualification. So if it said zero on their credit report and said deferred, we didn't get to just say zero. Fannie Mae, Freddie Mac, FHA, VA, basically every loan provider out there said, look, you may be deferred now, but you're not going to be deferred for 30 years. And this is a 30-year loan. So you need to qualify with a monthly payment. Now, over the years, those amounts of calculation have adjusted, but right now, Fannie Mae, Freddie Mac, and FHA have the qualification formula of 1/2 of 1% of the balance. So if you have a $10,000 balance, that equates to $50 a month as far as a monthly payment that we have to use against your debt ratio. If it's a $5,000 balance, it's a $25 a month payment that we have to consider against your debt ratio. VA is a little different. It's actually 1/12 of 1% or something like that. I have to go back and look it up, but it's something that we have to calculate and bring into the debt ratio. So it's not really going to affect us too much because, again, many of these people's student loan debts are still in deferment. Even once they're now back in the repayment status, it's no longer a COVID pause, but they're still in deferment based on the terms of the loan when they originated it because they're still in school. And maybe they have a different type of work study program or something like that where their employer is, going to be paying for a portion of it. It depends. But there are some people who are now going to need to pay student loans because maybe they've graduated. Maybe they are now due and repayment is now in effect. And quite honestly, a lot of people don't know what that payment is going to be because they haven't heard anything from their student loan provider for 3 years. So that is something we're going to have to pay attention to when it comes to qualification and the overall economy, because obviously we know student loan debt is in the trillions. This is a huge number that is now going to be coming back, and people are going to not only be making payments on, but interest is going to be accruing on. So with that, let's take a look and see where the market is. How is the market feeling about that kind of news? Well, we are currently down 2 basis points on the mortgage-backed security, but more interestingly, we are down 10 basis points on the 10-year treasury. So that's important for us to understand the 10-year competes directly with home loan interest rates. We want the 10-year to go down. That's because the chart and the statistics and the numbers that you're looking at here are based on the yield. So think of it as the interest rate that the investment into a 10-year treasury is today. The return is 3.719. So a lot of people do not want to see the yield go down on a 10-year treasury because they actually can, some people live on the yield that they get from their bond investments, their treasury investments. So they don't want to see that come down. This also affects savings rates. This affects money market rates, things like that, more of a fixed asset environment. They get the lead from the 10-year treasury. So they want to see the yields high because they're going to get a higher return on their investment when the yield on the 10-year treasury is high. But that means that home loan interest rates are higher as well because the home loan interest rate yield competes with the 10-year treasury yield. So they usually rise and fall together. So we want to see the 10-year treasury go down, and it's down 10 basis points today, which is good for us in the home loan interest rate world to see. This is the chart here for the mortgage-backed security that's now down to end of day. It's now 5:06 p.m., so the markets are closed. And you can see here that we did break above this 25-day moving average, but did not get above the 50-day moving average. We're now in this range here, looking for some sort of material information that's going to push us above the ceilings we have above us right now and turn them into ceilings underneath as we climb back to the lower interest rates that we were sitting at. Where are we right now as far as our home loan interest rates? We're going to run a couple of scenarios today. I want to take a look at some different FICO score ranges because a lot of people say, hey, I like your information, but not everybody out there has an 800 FICO score. So let's take a look and see where home loan interest rates are for more mediocre FICO scores. So let's run this here for the Brent Bruce Daily Variable Qualified 30-year fixed conventional home loan with an 800 FICO score and 25% down. And we're looking at 7.625 right now with the loan store. With a little bit of a credit, $256. Now, again, if you are a consumer, if you are a buyer, if you're a borrower, if you're a real estate agent, and you go, oh, cool, well, let's go call the loan store and let's get a 6.75%. That is not how this works. Okay. You cannot get that interest rate by calling the loan store because the loan store doesn't sell home loans through any type of retail channel. You have to go to a broker. These are broker rates, pre-negotiated broker rates. The interest rate of 6.75% based on the parameters that you see here that I put up every single day was something that was negotiated on between myself, my company, and the loan store years ago. Okay, we negotiated that previously. So you cannot go get a 6.75% interest rate with a credit of $256 from the loan store. This is a wholesale price. You have to get this from Rancho Capital, from me, because I've already negotiated that cost with the loan store wholesale. So I just want to make sure I point that out. A lot of people say, oh, well, these are great. I'm going to call these people. You can't call those people. They don't do loans directly with clients. They go through wholesale channels and brokers. Make sure that you are working with a broker when it comes to your home loan, your home loan products. So take a look here. Again, we looked at the 800 FICO score. If you want to see what it looks like to get maybe a little bit lower interest rate, 6.0% is costing just under 2% in points, 1.792. Still pretty good. We were sitting at 2.5 not long ago, so that's a little bit of an improvement. So once again, Brent, not everyone has an 800 FICO score. Okay. So we're going to take the same parameters. We're going to change this to a 700 FICO score. And this, again, is a conventional home loan with 25% down. Now we are looking at 7.125 with an $11 credit with Flagstar Bank. Once again, Flagstar Bank wholesale. Flagstar Bank is a bank. You can go to Flagstar Bank and get a home loan from Flagstar Bank, but it's not going to be the wholesale prices. It's going to be the retail prices, and they're going to be way higher than that. So anyhow, 7.125% with a credit of $11. All right. And let's go see. Okay, well, what if I have a 660 FICO score? All right. Well, do FICO scores really matter when it comes to home loan interest rates? Well, now you're looking at getting a 7.5% with a $587 credit. All right. So if someone's going to get a 7.5, interest rate, what I'm probably going to say is, well, let's take a look and see, everything, all this being the same, what if we go with an FHA? And you're going to say, well, why would I want to take an FHA home loan if I'm putting more than 20% down? Because I'm going to have to pay mortgage insurance. You are. But what does the interest rate look like when you talk about a 660 FICO score? 6.625. Okay, so almost a full percent lower in interest rate. So there is a potential that even though you're going to pay mortgage insurance, the total monthly payment may be lower because the interest rate is so much lower. Now, maybe not. And that's something that you need to do is you need to talk to someone who is going to look at your scenario. If you are a borrower, if you're a buyer, if you're a home loan, or if you're a real estate agent, you need to talk to someone who doesn't just spit out the number that comes out on the computer from Quicken or B of A or any of those people. You need to work with someone who looks at all the products, all the pricing, puts together multiple scenarios, and finds the best deal for you, the best deal for your client. And that is what a true broker does. And you get all those services, and like 99.9% of the time, you have a way lower interest rate on top of that. So make sure that you let me know what's going on. Reach out and I will definitely see if I can help you out. Definitely in both Tennessee and California. I have friends and brokers all over the United States that I can refer you to, and we can help you get a better deal and know more and get a more professional experience by working with one of the local brokers. So let's go ahead and make sure that you like, subscribe, share, hit that notification bell up in the top corner. Reach out to me directly. If you think I may be able to help you out with your scenario, my contact information is down below. I will talk to you again soon.